The government has also made progress in its debt restructuring strategy, so another big plank underpinning the fund-supported program. And in particular, the government successfully completed its domestic debt restructuring over the summer. Monetary policy has been appropriately tightened. Wide-ranging reforms are being implemented to bolster domestic revenues, improve spending efficiency, strengthen public financial management, strengthen debt management, enhance transparency, and tackle financial challenges in the energy and cocoa sector. The authorities' economic reforms also include measures to ensure financial stability and also to make the environment more conducive to private sector investment and job creation. Now, not all the challenges are going to be solved overnight, and there is still a lot of work ahead. But what makes us very optimistic is that these actions are already generating positive results. Growth in 2023 has proven more resilient than what we were initially envisaging. Inflation has declined. The fiscal and external positions have improved. International reserves are increasing again, and exchange rate volatility has significantly reduced. Let me stop here. I'll be happy to take questions, but before I turn to the Honourable Minister, I would like to thank him and Bank of Ghana Governor Addison and their teams, as well as representatives from various government agencies and as well as non-governmental stakeholders we have met over the course of the mission, and frankly over the past year, for very open and constructive engagement. Thank you.
Thank you, Stefan. And that is a view of the fund at the end of the first review. I'm sure our colleagues will have some questions later to interrogate some of the points that you have made. But I want to go to the Governor, Dr. Ernest Addison, for some remarks. Before I come to you, Ken. Governor.
Okay. Thank you very much, Honorable Minister of Information, Honorable Finance Minister, Ken Ofori-Atta, the IMF Mission Chief, Stefan Rude, distinguished directors of the Ministry of Finance and the Bank of Ghana, members of the media, ladies and gentlemen. Let me first start by thanking the entire IMF team for the constructive engagement during the past 2 weeks on all issues bordering on fiscal policy, monetary policy, and structural reforms. Indeed, it has been a very comprehensive and collaborative work between the government side and the IMF, and this has made the 2-week mission very successful and fruitful, leading to the staff-level agreement today. We have all established that the very decisive measures put in place by the government and the Bank of Ghana have started yielding results, signaling a faster than expected turnaround, which needs to be sustained as we reset the economy. More specifically, non-food inflation has dropped significantly by 19 percentage points. Food inflation has also come down by about 8 percentage points. Core inflation, which measures underlying inflation, is also decelerating at a fast pace. From the beginning of the year to date, the Bank of Ghana has built reserves of about $650 million instead of the programmed drawdown of $98 million. And this has been boosted by the innovative Gold for Reserves program. And as a result, we have seen relative stability in the exchange rate, depreciating by only 2.5% between February and now. It is therefore very important to sustain this strong performance and consolidate the gains we are seeing. Looking ahead, the Bank of Ghana will continue to maintain a tight monetary policy stance until it is confident that inflation is firmly anchored and aligned with the disinflation path agreed in the program. There would be challenges and difficulties as we work towards sustaining these gains, but we remain focused and committed to the reforms and prudent policies to ensure the full benefits of this program are achieved. I thank you very much.
Governor, thank you for the remarks. And now I would move to the Honorable Minister responsible for Finance, the Honorable Ken Ofori-Atta.
Thank you very much, Kojo, and really good morning to you all. Kojo, thanks for being here with us. Governor and the deputies, great Stefan and the team, thank you very much. And certainly, if I have my own powers, I'll ask us to clap for the technical staff of the bank and the ministry and the team. Yeah. So, ladies and gentlemen of the media, and really also to thank you for honoring this invitation. The program, as you know, started on 17th May 2023 and approved then a 36-month IMF program under the ECF, which was $3 billion. And really to also thank the fund staff. Our quota, when you look at a country like Egypt, also at 3 billion of a much bigger GDP, and Tunisia at about 1 point something, you realize the extent to which the fund staff worked to give us this very needed space. And also the negotiations which ended up with front loading, such that, God willing, by November we actually would then have released 1.2 billion of the 3 billion effective in that. So truly a lot of work has gone into this to give Ghana the opportunity to stabilize much faster. And this all hinged on the fact that Cabinet moved us very quickly to prepare the PC-PEC program, which then underpinned the work that the fund also had to do. So I'm pleased to announce that the progress that we sought to achieve is very, very much on course. The stability that the Ghanaian economy was very much in need of has been achieved. We said we have turned the corner. And the major economic indicators such as inflation, as Governor mentioned, the exchange rate continues to drop and stabilize, and there's confidence returning in the economy. I'm happy to confirm that Ghana has just completed its first review of the IMF program, as Stefan has announced. The first review, had key deliverables, including the 6 performance criteria, the 3 indicative targets, and the 3 structural benchmarks that were due at the end of June 2023. So you can imagine the work and the anxiety, the speed with which people have worked, even as we also try to manage demonstrations in the middle of that. But we are all good and we are in good order. So assessment of the progress at meeting program targets also due by end September 2023 and end December 2023, and discussions on the policy framework for 2024. So while we await the fund staff to present the full assessment of the targets, I think we are now in a very strong position to look ahead into the future and give all stakeholders the confidence that is needed to support the country. So that's the backdrop. But in all of this, as you know, we really want to give gratitude to the Almighty God for providing the needed guidance to both the government, the fund staff, and all of us to be here today. And we are very, very appreciative of what the Lord is doing for us in our economy as a country, and we believe He will perfect it to its logical conclusion. Let me also thank His Excellency the President for his continued leadership and direction through this period, and also the Vice President. And this is not really hackneyed. Cabinet has had to meet out of turn. We've had to have various EMT meetings, and so their engagement has been very important, and a commitment to make sure that the President himself is driving it with the energy that is required in the circumstance. And we can't take it for granted, because we do have a clear view of what's happened in Chad or Zambia or Sri Lanka, Egypt, Tunisia, and we know that something different is happening here. And therefore the leadership of all of these people we've mentioned are important. Expressing our appreciation to the IMF in general, and particularly also to the Managing Director, Kristalina, Stephen Roder, IMF Mission Chief to Ghana, and his team, and for their continued commitment to Ghana as we work to navigate our temporary crisis. I also have the really would like to thank the sector ministers and staff of the MMDAs, the CSO financial sector, and the private sector players whose consultation during this process succeeded in reaching this positive outcome. And for me here, I'll say my Linus blankets of Minister Amin and Deputy Minister Abina and Deputy Minister John. And it's beyond the work they do, it's also they being parliamentarians, and if I feel I'm overwhelmed, I wonder how they manage to do both. So sincere thanks for that support, the sacrifice and the hard work that is being shown at the ministry. So a lot of hard work indeed has gone into it, and it's a really significant milestone. I believe we might be sort of in recent times the fastest to get to this first review in 5 months, and as we steadily make progress toward the approval of the first review, there's still some work to be done through November, and I'm sure we'll rise up to that occasion. But we have also, beyond the quantitative performance criteria, the indicative targets, the structural benchmarks, also the turnaround strategy for Cocoa Board, and in addition, as Stefan mentioned, the issue of social intervention is important, and so the strategy to make sure that the LEAP program, capitation, etc., are truly anchored and are indexed to make sure that their lot does not get worse. And we also have agreed to increase this to about 2.5 million people in short order, moving from 350,000 households to 450,000 households going forward. So a strategy on reviewing the earmark funds, we have that in the medium-term revenue strategy. Performance for non-oil, Stefan mentioned, have been impressive this first half of the year, and we should continue with that. We also have an affirmative action bill, social protection bill, EPA bill, all approved so that the empowerment of women and protecting the poor and vulnerable will be front and center to the work that we are doing. So it's important to note, though, that the SLA is only one aspect of the approval process. We have a few milestones to cross to secure board approval between now and November. Notably, of course, is the agreement and memorandum of understanding that we need to secure with the official creditor committee, the Paris Club. We are optimistic that once again our bilateral creditors will deliver the MOU in time for our board in November as we continue our engagements, which will continue to be positive. So let me also take the opportunity to thank the OCC for delivering the financial assurances in May, which has brought us this far. We also are making progress in our engagements with the Eurobond holders and commercial lenders, and we hope to pursue this in our trip to Marrakesh for the World Bank annual meetings, and hopefully by year end we should be able to secure that. So generally the macroeconomic environment continues to show strong signs of stability and recovery as government implements the IMF supported PCPEC program. Based on available data from year to date, GDP growth has rebounded strongly, averaging 3.2% in the first 2 quarters compared to 3% the same period in 2022, mainly on the back of growth in services and in agriculture. The average growth of 3.2% for Q1 and Q2 is higher than the 2023 revised growth target of 1.5%. So we are doing well. The latest price development in August 2023 also indicated a fall in headline inflation after consecutive upward trends since May 2023, and it dropped to 40.1%. And as the governor mentioned, we are looking very strongly at this to ensure that food prices come down. The Ghana cedi has remained relatively stable from the beginning of the year to date, depreciating cumulatively by 23.5% over that period. But that really is essentially a huge jump in January, and basically since February to date, about 2.5%, creating the type of stability that is required for businesses and for confidence to be built up. So the inflation over this period, February to now, is only 3.1%. On the fiscal front, the primary balance on commitment basis for half year 2023 was a surplus of about 2 billion compared to a target of 4 billion, driven in part by strong non-oil domestic revenues and rationalized spending. Non-oil public revenue for the period was 50.1 billion compared to program target of 49.8 billion. The MPC, of course, governor maintained the 30%, and international crude prices, had its own effect. Adjustment for utility tariffs remain a risk that we are going to maintain. And as you know, we spend considerable amounts on the IPPs, but to ensure that energy is not a problem, the lights have been kept on and there are no queues. Gross international reserves continue to be built up, as the governor has mentioned. On the debt restructuring front, we successfully concluded the remaining 3 crucial debt exchanges, marking the completion of the comprehensive Ghana domestic debt exchange program. And let me reiterate, marking the completion of the Ghana domestic debt exchange program. I think we've done extremely well. The 3 concluded debt exchanges included the US denominated local bonds of $742 million. Participation rate was 91.7%. The cocoa bills, 7.7 billion, with participation rate of 97.4%. And of course, the pension funds holdings of treasury bonds of 29.6 billion with a participation rate of 95.3%. And really would like to thank Labour and the trustees for very cordial relationship to get to a good end. We also, as you know, on August 22nd settled some 2.5 billion of coupon payments, the largest in our history. An additional 2 billion was also paid to the pension trustees, and 274 million on Esla and Dachi on 5th September 2023. Looking forward to be ready in February next year for the second payment. As I mentioned, paid almost $500 million to IPPs and fuel suppliers as support from the Ministry of Finance to keep our lights on. So notwithstanding all of these uncertainties around the global economic recovery, we are confident that we are on the right path and therefore optimistic about the future. Already the economy is responding positively, strongly to the news of the GOG and IMF reaching an SLA agreement for the first review, and we are eager to leverage this momentum to the very moment when the fund and executive board approves the first review in November. We are also grateful to the IMF, the World Bank, the FDB, other multilateral lenders, all our bilateral partners, and the good people of Ghana for their support as we make steady and strong progress out of this temporary difficulty, through which many countries around the world are also working their way forward. But I think a distinct part of the Ghana program is whether we can continue as a nation to speak one language, because it is clear that when we work together, there's nothing that we imagine that will not be possible. And that's really the encouragement that I have. This is a moment in our history where we must strive to do what is good for each other, and we are confident that we will get there. So new things are being done. Even in this difficult wilderness, we can see that our rains, our rivers are doing well, and that the palms that we have would also thrive. So we are confident that we will work this through together as one people, restore our macroeconomic stability, promote robust and inclusive growth. We have done it before, we can do it again, and really what the Lord has started, I think He would perfect, as in Philippines 1:6. Thank you very much indeed.
Honourable Minister, thank you for your remarks. Colleagues, I'm going to come to you for some questions just to put our conversation in perspective. Between the fund and the finance ministry about two sets of issues, and I'm reading from the fund's statement, part of which were also amplified by Stefan. One says that there's been strong policy and reform commitment under the program and it is bearing fruit. Two, that the signs of economic stabilization are emerging. Three, that the growth already happening in 2023 is proving more resilient than initially envisaged. And four, that the fiscal and external positions have improved. Also makes a fifth point that there is exchange rate stability that you are observing there. You find a lot of them in the minister's submissions as well. And then minister also outlines the fact that the criteria that was set out for this first review, we have performed on that criteria very, very strongly. Net international reserves, primary balance, the ceiling on non-concessional borrowing, zero central bank financing, and zero collateralization, as well as the indicative targets, non-oil public revenue, social protection spending, and non-accumulation of payables on net basis. And then the structural benchmarks, we're also doing very well there. And in addition to that, the cocoa board turnaround strategy. Governor also mentions that while food inflation, etc., may be coming down, the bank has also got their eye on their inflation targeting, and if they have to continue with very tight policies to help out, they won't be afraid to do so. It's in this context that we are going to take our questions on these matters that we have discussed. So please give me a wave. I'll send a microphone to you. Just introduce yourself, and then I'll take your questions on the matters that we've been discussing. 1, 2. So Oye George. 3, 4. So we have our first 4. Oye George, number 3, and then number 4. Duke, is that you? Okay.
Thank you very much. My name is Nanoye Ankra. I work with Adansie Radio. Honorable Minister, with the indicatives that you have presented, looking positive, as well as the mission chief, can you please give us in plain or simple terms how Ghanaians have benefited from the first tranche that came in? And then if you can also give us some key sectors that the second tranche, if approved, will the second tranche go into? Then my second question is to the mission chief. With the indicators that you have presented, are you going to review, is the fund going to review the Ghana's growth rate from the current 1.5%? Thank you.
My name is George Rafi from Joy FM, Joy News. My first question is to the mission chief. In your first visit, you spoke about seeing signs of recovery. Do I get from you now that it has been elevated to signs of stability? Because there were concerns about whether indeed there are signs of recovery or not. And when it comes to the fund, what are some of the basic benchmarks that you look in reviewing the economy when indeed it's recovering or it's stabilizing? If you can help me out, I'll be grateful. Again, embarking on the fiscal consolidation program comes with its own shocks. Apart from the LEAP program, what other things are you impressing on government to minimize the expected shocks that this program will come with? There is review of tariffs, there have been complaints, there have been concerns about road projects delayed and all the rest. It has impact on the society. LEAP might be just a minute section of the society. What else are you advising government to do to ensure that this progress that we are making, whilst we are seeing growth, there are some who make an argument about jobless growth. What is being done in that space? Also to the Minister of Finance as well, I want to find out from you, what progress are we making in terms of the engagement with the external creditors? Are we making some significant progress? Some will say that going into an election year will be our biggest test. Having a fund program and an election year. What sort of assurance are you giving to us in terms of still being prudent with the expenditure, value for money going into an election year? Thank you.
Thank you. My name is Duke Menson Poko. I work with TV3. My first, yes, okay, thank you. Question to the mission chief. Ghana is not the only country in Africa currently under going an IMF program. If you do have the figures and you have the information, kindly share with us how favorably we are doing in comparison to other comparative African nations that are going through an IMF program. And then secondly, to the minister, taking off from where George left off in relation to our external creditors, from what the mission chief has said and from what we've read, it looks like a very key benchmark. Do we have a firm plan in place to reach that MOU with our external creditors? And will this have any impact on our economy? We've seen the impact of the DDEP and all the concerns. This benchmark that we have to meet in relation to external creditors, do we have a firm plan, and what likely impact would it have on our economy? Thank you.
Hello, I'm Maxwell Adombile, Reuters. quick one on the issue of external creditors. I want to be clear. Is it a condition precedent to the approval, the final approval by the executive board? Do we need to get an MOU with bilateral creditors for the executive board to be able to approve this review? Is that the same with the Eurobond holders? If not, what is the arrangement? And if we require that, is it similar to what is happening with Zambia? Then the issue of Afrexim loan and then the cut-off dates with the Eurobond holders. What is the status now? What is the agreement? What's the funds thinking about Afrexim's loan? And then on the DSA.
Can you take the Afrexim question again?
Are we going to add Afrexim to the debt treatment process or not?
Which of the Afrexim
the $750
facilities
that we took last year?
Okay.
$750 million.
Okay.
Okay. On the issue of DSA, as you've said, both sides have said, the situation has changed significantly. Exchange rate has improved, inflation has improved. These have an impact on the debt that we are using to discuss with both external, the OCC and then the Eurobond holders. Are we likely to see a revision of the DSA to capture the current situation? Thank you.
Thank you very much. So, Stefan, you're very popular in Ghana now. There are some of the questions that come to you. I don't think I have to go over them. So maybe you take it and then I'll go to Minister.
Thank you, Minister, and thank you, everyone. So I'll take a few of these questions. I think there was a question, first of all, about the growth rate. Our intention is not to get into the very details of the changes in projections at the current juncture, because we need to finalize everything, the assessment, and then to present it to the board. But just to give you a little bit of a perspective on where we are and how we are looking at things, the Minister mentioned that the growth performance in the first half was of the order of slightly north of 3% growth. And what we had in terms of projection for the year as a whole was 1.5%. So that gives you an idea of the difference in terms of what is actually happening on the ground and what the assumptions of the program were. And so yes, we will revise growth up for this year, but I will come up with details and the exact number later in the future. George's questions about recovery versus stability. I think on recovery, really, the question is similar to that about, the one that I just answered about growth, really. What we are seeing in terms of growth dynamics is better than what we were anticipating. I think this is really very good news. On the stability front, I would say this is the same. Inflation is coming down. International reserves of the central bank are going up, which is also very important to bolster confidence. And so we also have the adjustment to the fiscal position. The Minister mentioned the numbers for end June that are much better also than the targets. The external position in general is stronger. The currency has become much less volatile than what Ghana has experienced at the end of last year, where it was a very, very challenging situation. So clearly there is a turnaround, there is an improvement, and signs of macroeconomic stability are now emerging. Again, this is not the end of the road. I mean, inflation is 40%. We want to see, everyone in this room wants to see it much lower. But certainly, we are coming from a position where inflation was at 54% at the end of last year, and so the traveling direction is certainly the right one, and things are improving. A question about the LEAP program, but I think it's really a question of more generally about social interventions. And yes, social interventions and social policies are very important for the government and for the program. And the LEAP is a key focus, but you will remember that in the program we have a target, a floor on social spending, and so the goal is really to make sure that the adjustment of the budgetary position is not done at the cost or by raising costs for the most vulnerable in the society. And that target covers not just the LEAP, which is a very important, very effective and very well-targeted program, but also for a few other social programs, including, for example, the school feeding program, which you will remember, the benefits of which you will remember were doubled in the context of the 2023 budget. And so we are looking together with the government at all of these important programs, and they are covered under the indicative target of the ECF. But generally speaking, I think it's not just about that target. It's also more, more broadly about interventions in the health and in the education sector. Also, not everything is included and covered in the program, but there's also lots of. The government is also making significant efforts in these sectors, and I think we have to acknowledge that as well. Maybe just a reaction to the question on the use of the fund. I think the minister can say much more, but of course IMF funding has two purposes in the current environment. One is to help the central bank rebuild its reserve buffers, and the other one is to help the government finance itself at a time when the situation is quite difficult, especially when debt is being restructured. And so I think you have to think of it more from the macro angle as opposed to from an angle of IMF money financing specific programs. It's really about rebuilding reserves and allowing the government to function properly in general, not necessarily just for specific programs. On external creditors and what is needed from the IMF's perspective for us to be able to proceed with the board meeting, we mentioned it several times. We refer to it in the press release. What is really needed at this stage is what we call financing assurances. The nature of those financing assurances, you will remember at the time of the program approval, was a general commitment from the official creditors to provide relief consistent with the program parameters. We are now at the first review and we need progress, and so we're moving from a general commitment to a specific credit commitment on the terms, specific terms of the debt restructuring. And so what is needed at this stage is an agreement between the government and the OCC on those specific terms. For the external commercial creditors, based on the IMF policies, what is needed, it remains the same than what was needed at the time of the program approval, and it's just making sure that there is progress in the sense that the government continues to make good faith efforts with those external commercial creditors to reach to achieve a debt restructuring agreement that will be also consistent with the program parameters. And then finally, I won't comment on Afrexim because this is, as you know, I think I have explained that. I explained that several times. The role of the IMF is not to tell the government how to restructure the debt, but just to make sure that the debt restructuring strategy is consistent at the macro level with the program. But it is very much a sovereign decision to decide which part of the debt is included in the perimeter of the debt restructuring and how that debt will be restructured. So I won't comment on this. On the DSA itself, indeed, at each review, and this is the case systematically for all IMF-supported programs, the DSA, the numbers will be revised as we revise the macroeconomic framework. That means growth, inflation, exchange rate. All of these will be changed slightly to reflect the reality on the ground, and so the debt stability analysis will also reflect that revised macroeconomic framework. I'm going to stop here.
Thank you very much, Stefan. Great questions and for the conversation, and thank you very much for that. I think the challenge, for all of us in this very difficult time is to be able to get to some equilibrium where we don't really take things for granted, in terms of the lights being on, the amount of money we've spent in that sector to make sure that life goes on as uninterrupted as possible. And then, as Stefan mentioned, a keen eye on the social interventions to make sure that we index it and that we intervene at the right levels. So the indexation that we have put in place will make sure that we support it with issues of inflation, intervene, also increase the number of households that would be taken care of. So those are very active things that we are doing. Stefan has mentioned the issue of the growth factor. So there seems to be some resilience in the economy that we are pleased with, and will continue to support that. With regards to the specific use of the funds, also Stefan mentioned, goes on to support balance of payments and international reserves that are important, and it's budget support. So areas that require interventions, we then do that. I think, George, you mentioned that the thorny issue of growth and joblessness, and therefore specific interventions that we need with the Enclave program, the Youth Start, etc., to actually tackle those as well as we can in these difficult times. External creditors, I believe we are doing well with regards to the engagement. Expected that this coming week we might actually get a proposal for them. Our target is to be able to conclude this thing before year end, and we are pursuing it. And I think achievements of the SLA also puts pressure on coming to faster resolution. So this achievement is important towards our negotiating stance going forward. The Paris Club Common Framework, MOU, certainly France and China continue to be very supportive, and we'll engage them in the coming weeks for that. But the MOU is important for the board, and so we'll make sure that we do achieve that, as it came through in May last year. The Eurobond, as Stefan mentioned, requires good faith efforts moving in the direction to reduce the impact. And I think we are all quite sanguine about where to go to make it possible. The good numbers of the exchange rate and inflation, of course, would impact the DSA. Appropriate adjustments will be made to give more space, but we still have to make sure that the debt restructuring is not compromised going forward. So it's going to take the collective, common collective effort of all of us, and truly a country that is committed to moving forward, to burden share, and then other groups like the MOU from the Paris Club and the investors and IPP power producers would also fall in line to accelerate this. But in all of this, ladies and gentlemen, is the President's clarity on a growth agenda. So we've had a plethora of meetings this past month looking at a growth agenda to make sure that even with the strong recovery in terms of growth, that we'll have a program that will further enhance that. And so we look forward to all of us working, speaking the same language to move the agenda forward. Thank you.
Thank you. I'm going to come round for a final batch of questions, and then I will come to principals who are here to respond. So are there any takers? 1, 2, echo 3. George, if I don't get any takers, I'll come back to you for a follow-up. So 1, 2, 3, and then George, I'll give you the final word. That's a bonus question for you. So can I get the microphone? Echo, you would have to move to where the microphone is.
Hello, my name is Manuel Bruce from Daily Graphic. My question is to the IMF chief. Treasury bill rates are beginning to inch up again with the 91-day Treasury bill now over 28%. Considering that this is the only market available to the government for borrowing, does the IMF see this as a threat to the country's debt sustainability, which is a key component of the program?
My name is Nila Telate from City FM, City TV. My first two questions go to the Finance Minister. Mr. Minister, what's the state of the Financial Responsibility Act? Has it been restored? I'm asking because we know our previous engagement with the IMF has not actually dealt with, our fiscal slippages. What's the guarantee this time around as we make progress with this current, extended credit facility? And between now and when we expect the restoration of the Act, what does it look like in terms of, dealing with government and discretionary, expenditure? The second one has to do with, prior to the first disbursement, we saw a number of government projects being put on hold. With our high hopes of the next tranche, are we to say that it is going to pave way for the resumption in some of these projects? Lastly, Mr. Governor, the last time we met at the MPC, you gave strong indications that the Financial Stability Fund will be operationalized. You said some modalities will be firmed up. I just want to know if these things have been done, because banks are actually looking forward to it as they try to, make some rebound over there. Thank you.
Echo.
Thank you very much. My question is to the Finance Minister. Minister, you mentioned Cocoa Board. The board has gone through a restructure, as you said, but it has also increased the farm gate price by 63%. Meanwhile, the board doesn't have money to buy the cocoa. This year, for the first time, it couldn't raise its syndication on the back of the debt issues. Now, it also owes the LBCs, the license buying companies who buy the cocoa on behalf of the board. And now the debt is piling up. Think you not that whilst you are just resolving another is also piling up? Question 2, you mentioned resilience, but the growth you have recorded have all been, I don't want to say superficial, in terms of the fact that it is services that is driving the growth. The real sectors are contracting. Industry is contracting. For like 3 consecutive months, there's been a contraction. So the growth that we are seeing, it fairly seems service-driven. And for an agrarian economy like ours, I wonder whether that really can be considered resilient. Can I get deeper detail? Thank you.
So we'll go for the final question, but I think we need to correct some facts. In the services constitutes part of the rail sector. And then secondly, if you look at the growth numbers, Agric is also doing about 6.2. So those factual inaccuracies need to be corrected even before we respond to them. George, I'll give you the final word.
To the Minister of Finance, my question on the election-related spending and the fund program wasn't answered, so I wanted some clarity on that one. The staff is supposed to go to the board in November. From now to November, are you assured that you can close a deal with these external partners or creditors for you to be able to get the program approved by the external board? And to the Governor of the Bank, you talked about maintaining a monetary stance, quite a tight one. Does it mean that we're still going to see policy rate going up, because there are still concerns about how the tight policy again has come with some shocks for the economy? Now that we've seen inflation going down, are we going to see some easing as well? And with now passing the first review, what is the expected impact on the currency? We've seen some blips with the cedi recent times. How would this impact the local currency? Thank you.
So, Stefan, again, I'll start with you. Or maybe I should start with Governor this time around. Yes. Governor, you've been on holiday this morning. Let me give you problems.
Minister, I don't know why you want to drag me into all of this. Right? Just probably to start with the last question on the direction of the monetary policy rate. You know I will not tell you exactly what the direction is. I think the important thing to note is that we're happy with the direction of inflation, and we are looking at staying on that path. And depending on the developments, we will take the appropriate decision. I mean, if it happens that inflation falls much faster, right? If it falls much faster than expected, then you could obviously expect that the monetary policy rate could go down. On the other hand, if it doesn't, it could also go up. So it's very, dependent on the developments in the data. And just a little clarification on the cocoa board issue. I think that they are still getting the syndication this year. It's just that the size of the syndication is going down from, I think, 1.2 to 800 million. That's it.
Stefan?
Okay, I think there was only one question for me this time around, which was about the treasury bill raise, or generally speaking, the cost at which government is financing itself at the current juncture. I think it's a very important question because we see that this is the type of question that comes back often in the press, in the media, and so I'm glad I have the opportunity to respond to this question and to say that from our side at the fund, we really have no concern about the current interest rates at which the government is financing itself. It comes as no surprise to us that interest rate would be around where they are today, slightly below 30%, because inflation is running at 40%, and the policy rate of the central bank is also, around 30. So it is no surprise, and importantly, it is fully in line with our expectations at the time we designed the program and at the time we made the projections that underpin the debt sustainability analysis. In other words, that type of cost for the government is fully consistent with the expectation and with achieving debt sustainability over the medium term.
Minister, so I'll come to you, and while at that, you may want to add your closing remarks to it.
Thank you very much. Thank you very much for this. I think most of the questions have really been answered. I don't know how to square the circle at this point, but I think we are in good shape. The issue of the Fiscal Responsibility Act, I think, was mentioned, and that, of course, was suspended due to the COVID, and then, of course, the second black swan of the war, also impacted that. But we actually are in discussions as to how to even make it more efficient, and therefore are consulting on how to do that. But when there are genuine cataclysmic incidents such as these, you do legitimately suspend issues, laws like that. So that's where we are, but we are looking at that. With regards to treasury bills, Stefan has answered on the fact that is actually below inflation, but your question is still legitimate, because then it also becomes an issue of cash flow and fiscal space, and therefore how one has to manage that to make sure that we can raise resources in the market, but somehow not move into the zone in which we're in and which led to this. So that's a difficult dance, but we'll have to do it, and therefore our interest in bringing inflation down, is really very, very primary. in that, and the governor will respond when inflation is coming down. So that's work. So you saw 2 weeks ago the launching of the Planting for Food program, which really in the end tackling the agriculture sector, which fortunately had like an over 6% growth, becomes even more important for that. But the governor did mention that food inflation had actually contracted by about 19%, but it's still too high, and we need to figure out how to bring that down. Cocoa Board, both governor and I will now be on the board, and the ministry is also setting up a desk that will work with the finance division in Cocoa Board to make sure that we manage the future in a much stronger way. So when we talk about resilience and therefore our approach to agriculture, which seems to be responding, and we really, some countries live on services, so we shouldn't really underrate what services can do for us as an economy in terms of capacity to absorb jobs and get people working from every corner of the nation. So yes, the resilience is there. People depend on maybe oil as one product. We have oil, we have cocoa, we have services going on, and that's helpful. I think to not be surprised at where we were last year to where we are today, and not really acknowledge that there's some resilience, whether we put our finger on it or not, it's just being disingenuous to ourselves. So let's also identify these strengths and find ways to encourage all of us in this collective effort to build the nation. So let me really, Mr. Minister, just thank everybody for coming, and truly the work between the Ministry and the Bank of Ghana has been exemplary, and also to thank Leo being in Ghana, continuing to encourage us, Stefan and the team for just incredible chemistry in the way forward, and really a certain common collective will to see this work. We are most appreciative, and as we say, the Lord will show us hidden treasures and build rivers in the wilderness with your help. So thanks, Minister.
Honourable Minister, we are grateful. Colleagues, as we wrap up, my prayer is that you remind your audiences of the following. Number one, that when the global economic crisis started, Ghana put its own program on the table called the PCPEG. That's the first thing that we spoke about as far back as July 2022. Ghana put its own program together, the PCPEG. Number two, we then requested for support from the International Monetary Fund, and that's why Stefan makes the point that it's an IMF-supported program. It's our program supported by the fund. Number three, that after the first disbursement, we have passed our first review. And the review has been passed because we have met the KPIs on that review. Inflation gradually doing better, growth gradually doing better, exchange rate stability gradually doing better, fiscal slippages, we are gradually containing those ones. That's very important that you let the people of Ghana know that this first review has been passed because of this performance, and that finally there's still a lot more work that is ahead of us, and we need the collective support of the entire country to achieve that. These decisions are difficult, but we've got to take these measures so that we can get our economy to the point that we desire. I want to thank you all that you've been with us this morning, to the members of the mission team, to the staff and directors of the ministry and the bank, to Chief Director, to Governor, to Stefan, Leo, and Honourable Minister. I want to thank you all for being with us. Ruth, our chaplain for this morning, will pray us out, and we thank you all. Well, Chief, Perhaps you have to pray us out.
Yes, I will. But before I do that, Honorable Minister, if you would permit me, let me just mention a couple of the directors, my colleagues who have led this effort. Dr. Alassane and team, thank you very much. I think we need to give them a hand. Kwame, where's Kwame and Prosper? Thank you very much for all the effort and the determination to get us through. I want to also mention Mr. Arkest and the debts. What I mean for ensuring that we go through our DDEP. Thank you and your team. I want to also mention Mr. APJ for the arrears clearance and all the effort that had gone in. Thank you. And the Director of Budget. So please.